Bitcoin is got amazing distribution in terms of its ownership around the world. So if you say to yourself, if 50 or 60% of the people that currently own Bitcoin believe it's an asset class, will they continue to buy Bitcoin? Will they continue to hold Bitcoin? Will they recommend it as an allocation in portfolios? If that's the case, then $200,000 is too low for Bitcoin. You know, something like $500,000 would be there. So
when's $500,000?
Well, you know, Cathie Wood says by 2030.
What does Anthony Scaramucci say?
I don't know. I'm not as smart as Cathie or Michael Saylor. I mean, they would say those numbers fairly quickly, but I would say that that could probably happen in the next 5 to 8 years.
Since May 10th, Bitcoin has entered a consolidation phase, maintaining prices above the key psychological level of $100,000. This pause in momentum raises the question of whether the rally is stalling or preparing for further gains. The current sideways movement mirrors a similar consolidation near $95,000, which was followed by a rapid $10,000 surge in just 3 days. Historically, these periods of stability often precede sharp price movements, suggesting that Bitcoin might be gearing up for another significant breakout. Since bottoming out at $75,000 on April 9th, Bitcoin has shown a strong upward trajectory, primarily fueled by spot market activity. The price has moved in a stair-step pattern, with phases of accumulation and consolidation, as reflected in the cost-basis distribution heat map. This map highlights clusters of purchases at similar price levels over the past 3 months, which have consistently preceded upward price rallies. The most recent peak pushed Bitcoin to a new high of $14,000, signaling steady demand and growing optimism for its future. Wall Street veteran Anthony Scaramucci offers a more cautious long-term view compared to crypto bulls like Cathie Wood, who predicts Bitcoin could reach $500,000 by 2030. Scaramucci suggests it may take 5 to 8 years for Bitcoin to fully realize its potential. As the market stands at this critical juncture, the big question remains: will the bulls continue to drive prices higher, or will the bears regain control?
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
So August of 24 to now May of 25, there's a quantum shift in crypto. Yes or
yes. No? Very different.
So
we will get it.
Very, very different, right? Yes. So a lot has happened and a lot of good things, frankly, have happened. But there's like a little bit of an undercurrent of some bad things. Can I address that just quickly?
Please.
So what I would say, and I want to be as fair as possible, because my crypto bros out there all voted for Donald Trump, and obviously I'm not a Trump supporter. They voted for Donald Trump out of almost like economic preservation. Some of them said to me, hey, the other team's trying to put us out of business. We don't want to be knocked out of business.
Right.
And at least you have to give President Trump credit. Good instincts, good political instincts. Let me just give a newsflash over here. There are no anti-crypto voters out there. Okay. Elizabeth Warren can set up an anti-crypto army, but guess what? There's nobody out there. So, why'd you vote for the person? Right. Oh, I voted for the person because I hate crypto.
There are pro-crypto.
Exactly. Okay. And so this is going to be a realization for everybody that there is no reason to be anti-crypto, but there is a reason to get the policies right, to get the regulation right, to create great clarity and definition on stable coins, market structure, and to make the industry safe for the consumer and the investor, right? We all agree with that. But the undercurrent, unfortunately, is that, and this is the problem with the president, you get everything with the president. Okay, so you're at the buffet table. You can't go to the buffet at Mar-a-Lago and say, I'll take a little bit of crypto good regulation. I'll take a little bit of good banking regulation. I'll take lower taxes. I'll take a better SEC chairman. And then you walk away with your plate and you're done. No, you got to get the dinner rolls. And you got to get the meme coin activity. Right. And you got to get the Trump grab bag of World Liberty Financial and Melania Trump coin, Trump coin. And you got to get the 51st state rhetoric, and you got to get the potential attack, military strike on Greenland and the tariff war.
There's a lot.
There's a lot. Okay. But it's a force feeding. You can't do Donald Trump a la carte. You got to do Donald Trump with the whole meal. And so it's causing a problem in the industry as predicted when that meme coin was launched. I was in the World Economic Forum, someone asked me about it. I said, well, there's going to be 60, 70-year-olds and unfortunately 80-year-olds in the Congress that are not going to like it. And they're going to slow roll the regulation. And we're seeing that now with the stablecoin regulation and the market structure regulation. But I am astounded, and I'll say this on very objectively, I'm grateful to the administration for ending the war on crypto. But let's try to dial down now some of the excesses. Right, we're both searching for perfection, aren't we? If you had said to me in November of 2021, the futures ETF was approved by the SEC, we had an all-time high at that moment, at least. We've gone through that, but we had an all-time high. I would have said to you, okay, pursuant to administrative law in the United States, like a cash ETF and a futures ETF are relatively identical. The administrator would be arbitrary and capricious if they didn't approve the spot Bitcoin ETF. So therefore, we're going to have great ETF activity in 2022. That did not happen. Had a lawsuit, had to ensue, and they won the lawsuit, and they had to put it in place 2 years later. But I would have said to you back then, there's going to be an influx of institutional demand. And I would have been dead wrong. And so
2022 was
2022. So I want to be very cautious. I will say to you that the people here are nibbling. There are people buying. There are sovereign wealth funds. I think Mubadala said they have $500 million of Bitcoin, but they've got like a $2 trillion balance sheet.
Yeah, so it's like
it's like $50 for so it's not massive scaling yet. But here is what is happening. There's legions of people on Wall Street that are selling the idea to other people. And I do believe that we're having some breakthroughs because in a month of April that I would characterize as chaotic and volatile for the overall global markets as a result of some decisions that the administration is making related to tariffs, I would say that Bitcoin had a fairly sturdy bid. And I would say from a correlation perspective, Bitcoin was slightly, if not more than slightly, less correlated to the Mag 7 or the NASDAQ, a result of which, if it's making a transition into store of value away from tech volatility, and we've seen the crossover point, that being April. I think we don't have enough data yet, but I'm just saying that's why I'm saying we're earlier than early. But if it's there, I think you're going to see an acceleration in demand for this asset. And I think you're going to push the prices to the price targets that we have at the end of the year. We're sort of like 150 to 200. So, and I've been, yeah. And but that'll also push up Solana. Other altcoins will gravitate as Bitcoin is the big kahuna, but the capital in Bitcoin does spill into these other markets. So again, listen, I've been humbled by life. I've been humbled by markets. I could be dead wrong. You can invite me back and dunk me in the town square if I've got it wrong. But I do think because of the regulatory framework, which I am giving the Trump administration credit for, and because of the ETFs,
right,
and what I know about Wall Street, 39 years on Wall Street, we are a selling machine. We go out with a story and an elegant PowerPoint, and we pitch this thing. Okay, Wall Street is one part parakeet and one part woodpecker. So hear me out for a second. We can repeat the same story with great enthusiasm ad nauseum, like a parakeet. And we can get up to the side of your head and we can peck at your brain like a woodpecker until your skull cracks and you finally say, okay, I'm tired of this guy. I'm going to take a 1% position in Bitcoin.
Fine, I'll do it, yeah.
Right. So, I mean, that's happening and it's working. This is sort of a weird industry because what typically happens is institutions come into something. They are the early money for Microsoft. They're the early money for Apple Computer. And then the company goes public and then the retail investor participates in the public offering after the institutions have made some level of economic rent early stage. This has been the exact opposite. The retail investor said, wait, whoa, this is a mutable asset. This meets a lot of the characteristics that we like of store of value. Can the world have a digital store of value? Well, the answer is yes. If you're spending 5 hours a day on your phone, that's roughly 25% of your day or, 20% of your day. So therefore, could there be a digital store of value? And the marketplace has answered that by giving Bitcoin almost a $2 trillion or slightly over $2 trillion market capitalization. So I guess what I would say to that person listening, you bought in. Some people probably thought you were a dummy to buy in. I know people thought I was a dummy to buy in. You bought in. But it turns out that you bought into something that's actually working. And this may be first time in a long time where the retail investor got there ahead of the institution.
Mm-hmm.
And the institution is coming in very skeptical. And the institution is coming in with a tremendous amount of research, and they're not coming in to speculate.
Mm-hmm.
And I think if you see an institution like the state of Wisconsin, Mubadala, Fidelity, they're buying because they see it as a digital store of value. They're buying because they see it as digital property. And I would want to give people listening to your podcast some comfort that the things that they probably wouldn't know, that I know, that when I'm in these meetings, the due diligence is rigorous. The due diligence is non-speculative. The due diligence is grounded in a long-term investment thesis. So these are people that are not buying Bitcoin for a trade. They're not buying Bitcoin for a 2-month price target. Mm-hmm. They're buying Bitcoin for a 5-year allocation.
The past 9 months have upended the traditional crypto playbook. While Wall Street largely stayed on the sidelines, retail investors struck gold, Donald Trump became a crypto advocate, and Bitcoin flexed its digital gold status. This ongoing tug-of-war between Bitcoin as digital gold and tech stocks reflects typical market cycles, where Bitcoin often experiences initial bullish surges followed by periods of consolidation that set the stage for the next major move. For instance, after surging from $75,000, Bitcoin traded sideways between $83,000 and $85,000. The following leg upward then stalled between $92,000 and $96,000. Since May 10th, Bitcoin has oscillated between $101,000 and $115,000, entering another consolidation phase. To push beyond this level, bulls must break through a significant wall of sell orders near $115,000. Multiple sources report over $50 million in sell orders clustered around $114,800, with an additional $70 million at $115,000. According to Anthony Scaramucci, this creates a formidable resistance zone. If Bitcoin manages to surpass this barrier, a swift climb toward new all-time highs could be on the horizon.
We're in the final phase of this bull run. Let me guide you. We've launched Daily Dose Crypto Alpha, a free private Telegram group just for the Daily Dose Crypto family. Inside, I'll guide you through profit-taking strategies, real trading tactics, long-term crypto investing mindset. Only 500 spaces available, then it's closed. If you're serious about this bull run, click the private link to join now.
I would say most people that I've talked to are saying that the halving cycle for Bitcoin's 4 years. We'll take it 25% longer than that. And we'll review it at the end of 5 years. Maybe we'll pair the position. Maybe we'll add to the position. But I think 5 years is more than a market cycle amount of time. It is done. And I think in our society right now and in the investment culture in our society, that's fairly long term. It's not Buffett. I'm going to own American Express, and I'm going to basically run the portfolio using a Ouija board 50 years after I'm dead. It's not Warren Buffett, but it's a long enough period of time in an asset like this. If you said to me that, Microsoft was going to go 100 to 1 or Google 80 to 1 or pick whatever the numbers are. If you look at the charts of Google or Microsoft, or they're going from zero ideas in a garage to several $1 trillion, and NVIDIA, I think, was it formed it at a Denny's table.
It was something,
Right. And now it's a $3 trillion company. If you said to me that those things would happen, they're very improbable things. So Tesla is an improbable story. SpaceX, an improbable story. So we can't say that these things don't happen, right? We have to say, okay, these things do happen. And then you just have to ask yourself the following question. And then there's a binary move after you answer the question. Is Bitcoin an asset class? Is it an asset class? If the answer is yes, then I believe, therefore, it should trade to the market capitalization of gold. It represents an asset class. That means that a portfolio consultant will go to a large-scale institutional investor and say, you need to allocate to gold. You need to allocate to Bitcoin. NVIDIA, Amazon, these others are investments. They're stock investments. If Bitcoin's not an asset class and it's a collectible, okay, whatever you want to call it, then where it's priced now is probably reasonably the fairly valued, meaning it's going to be in or near the Mag 7 in terms of its market capitalization. And so I've taken the position, rightly or wrongly, and I can back it up, I think, with a lot of color and a lot of commentary, that it is an asset class And it's very unique in the following respect. It's a global asset. If you look at American companies or the S&P 500, yes, people around the world own them, but they're predominantly owned by Americans. I'm a realist. A lot could go wrong. If you're telling me that the Indian-Pakistani conflict spills into a greater theater war, there's more theater activity in Europe. There's a potential problem in Asia. A lot of unpredictable things. Now, all those unpredictable things, Bitcoin could shift to, hey, let me sell my Bitcoin immediately, or it could shift to, hey, I want to own more Bitcoin. What I do find that on the weekends where there's bad news, because Bitcoin is the only market that's open, Bitcoin trades more. You know, you can see bad news, all of a sudden Bitcoin's trading down. You're like, okay, someone's looking for liquidity in their portfolio because they think they're going to get dunked on Monday, you know. But if these markets tokenize, Jack, and they end up, 24/7 markets, that'll obviously be, in my opinion, it'll be better for Bitcoin. It'll mean less volatility for Bitcoin. Right now, if I buy a stock from your account, let's say you put up your Citigroup shares for sale and I'm going to buy it, it's going through 7 different entities and the Depository Trust Corporation before it ends up in my account. Now, when I got started in the business, it was T+5. It took 5 days for that to happen. Now it's T+1. But you and I both know that over the blockchain, we can do that T plus a minute, right?
Do it lower.
Solana, we can do it T plus 30
You can send me some Bitcoin and I'll say thank you. And
I could do that. And somehow I think I would never get it back. So I gotta be careful around you. I have my phone. But my point is that not only do I think that's going to happen, but I think it's going to happen and it's going to reduce costs and it's going to reduce friction in the marketplace. So that's going to be good long-term for the market. And I would make the argument that 24/7 markets, where we've been resistant to this, we've had the ability and capability to do this forever. And we do have overnight trading that's off market and we have after hours trading that's off market. But if we had 24/7 market-based trading, I would make the prediction is that would calm people down, would make the thing less volatile because people would know, hey, it's 10:30 at night. If I needed to sell it, I'd sell it. Okay, and they would size themselves appropriately. I think there's a lot of activity and there's a lot of buzzy announcements that are being made. And I agree with all that, but I don't think there's going to be a quantum move until you get clarity from the U.S. government. If you tell me we have a stable coin bill passed, signed, sealed, and delivered, you tell me we have a marketplace deal passed, here's all the guidelines, signed, sealed, and delivered, and let's say we do this by the August recess, there's people smarter than me that think we can get it done by the August recess, so I'll accept that. But I do think it gets done before I'll make this prediction, it's not as bold as the August recess, but I do believe you're going to get those 2 pieces of legislation passed before April of next year. And the reason why is I don't think anybody wants to go back in their districts and start a campaign, which they're going to have to start, and grind it out to November being anti-crypto. Okay. I mean, if you're Elizabeth Warren and you own the state of Massachusetts, maybe you can get away with it. But most of these other people are not going to want to do that. They're going to have political action committees like Fair Shake. They're going to have other people in the mix. They're going to be supporting pro-crypto people. And so why not be able to go back to your district and say, yeah, I voted for stablecoin legislation. Don't come after me. Okay. So it may not happen by August, but I do think it happens by April. That's my prediction. And I would say to you that the question you just asked me, if you have stablecoin and marketplace clarity, then you're going to get an exponential move in activity from these institutions. People are ready.
100%. They're just waiting.
They're waiting. But they're not going to do anything until we get this clarity, in my opinion.
The Bitcoin price debate just received a major upgrade tied to the gold standard. New analysis suggests Bitcoin could realistically reach $220,000 by 2025 and potentially hit $1 million by 2030 if it continues to mirror gold's market behavior. This power curve model tracks Bitcoin's value in gold ounces instead of inflation-prone dollars, revealing striking patterns where each cycle accelerates Bitcoin's gains. With gold flirting around $3,500 per ounce, this bull run could deliver unprecedented returns. Analysts note Bitcoin's delayed but amplified reaction could spark a spectacular rally. One projection shows Bitcoin capturing just half of gold's future market cap, which would value it near $924,000, supporting Anthony Scaramucci's long-term institutional thesis centered on the digital gold narrative. However, timing remains a key factor. While the 4-year cycle crowd expects fireworks in 2025, skeptics await regulatory clarity, a hurdle Scaramucci stresses could make or break institutional participation. Despite this, Bitcoin is already decoupling from traditional markets during crises, with its 24/7 trading proving more resilient than stocks. Wall Street's persistent ETF efforts are gradually wearing down skeptics, setting the stage for a potential supercycle. Whether Bitcoin reaches $220,000 or $444,000 this year, one thing is clear. The debate over Bitcoin as an asset class is settled. The only question left is how quickly traditional finance will accept what the power curve already shows, that Bitcoin isn't just chasing gold but rewriting the rules of value itself. Do you believe Bitcoin can overtake gold's market cap by 2030? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.